Good, happy Wednesday evening. I'm Riley King, and welcome to Business News. Let's take a look at your stock markets that just closed. So, your Dow Joe Industrial Average closed in the red at 17,780.83 and went down in the red. S&P 500 closed at 2085.45 and went down in the red. And the Nasdaq also closed down in the red and went down at 4833.32. And we have some breaking news. Stocks closed lower as street counts down to Berkston vote. And we do have a video for you, so we're gonna play that video. We have an advertisement, so in a minute I'll play that video for you.
Like pre-finished hardwood up to 30% off. North American and European laminate over 20% off. And bamboo up to 20% off. Looking for popular distressed looks? We've got Virginia Millworks 10 to 30% off. Plus more styles from 49 cents. And 24-month special financing. The mid-year clearance sale ends Thursday. Get to Lumber Liquidators today.
We have a long sterling position on our fund relative to the US dollar, which we hedged actually for the last couple of months, and we'll be hedging through to pass the vote. In terms of equity markets, our portfolios are pretty defensively positioned, and we will look to kind of add some more market hedges, should we get to a Brexit vote on Friday morning. But I think I need to stress that, that's not our core scenario. We still think the vote will be to remain. So, we're just trying to make sure that we're kind of ready and ready to go.
So you're net long sterling. You're net long sterling, which would be putting your money where your view is, right?
Yeah, the funds we have hedged out that exposure. We do have a long, generally a long UK view within our portfolio, and the portfolio does benefit if, we stay with the Remain. What we've tried to do is just to hedge out some of that exposure should it go to a Brexit vote.
Now, let's say it goes the other way, and there is a vote to leave the European Union. What kind of reaction would you expect to see in the pound, and what kind of reaction would you expect to see in UK equities?
Yeah, I think we think the pound will probably weaken significantly in a kind of exit scenario, probably down to as low as 120 to the dollar. So that's a pretty significant depreciation.
Sure is.
In terms of equity markets, again, we think they'll be very, very weak. They'll be weak on the day. They'll be very, very, very volatile, and probably for a month or two following the vote. So, we think probably there's as much as 15% downside to UK and European equities in an exit scenario.
I was going to ask you, do you believe that beyond UK equities that kind of risk-off trade would flow around the globe? You just said Europe. What would you see? Would you see the same sort of reaction in the US, in markets in Asia?
Yeah, you'd expect the dollar to strengthen in that scenario. I guess the risk is that we get a recession in the UK and in Europe, and that causes some sort of, global downturn. I think that we'd probably be getting close to that sort of scenario. A lot of that will depend on the political kind of fallout after an exit vote. So, do European politicians and UK politicians manage to find some sort of amicable solution, or is it a kind of more, a difficult situation trying to find some sort of resolution once we leave the EU? So a lot of that we don't know, but obviously that's going to cause a lot of uncertainty. Until that uncertainty is resolved, we think that there's going to be it's going to be a difficult time for risk assets and global equity markets.
Okay, there you have it in that video, and it'll be interesting on that vote for the UK vote on whether to leave the European Union. We'll have to wait and see when that happens. Shares of McDonald's traded more than 1.5% lower as the greatest contributor to declines in the Dow Joe Industrial Average. And that does it for business news right here on the Riley King Network. I hope you all have a great rest of your Wednesday evening. Good night, everyone. Bye.